To our next guest, we have Chris Swift on the line. He's with Swift Trading Incorporated, based out of Nashville. Chris, this grain market so far just seems like a ship without a rudder today.
Good morning, Marlin. Yes, it does. We've been pretty much listless for the past couple of weeks in it, and looking like some of the rainstorms that we got yesterday across a lot of the areas kind of helped out some places that were a little dry. But it just doesn't look like much is happening. Our exports last week weren't very good, and it's fixing to be the middle of summer, and got a good growing season going so far.
When you look at I want to look at the new crop corn chart here, and we did see where those commodity funds really lightened up on their positions here, according to the Commitment of Traders report last Friday. I think they lightened up by something like 30,000 contracts, but they're still heavily net short by about 270,000 contracts. When you look at December futures, does that actually put a floor of support underneath the new crop corn?
Well, probably not. We've seen a floor ever since April. We bottomed this market in April, and we've stayed sideways. And just recently, we've been able to put on 10 to 15 cents, but that doesn't seem to be a whole lot of anything really in the big picture of things. We're still in a big downtrend, and honestly, I think all we're waiting for is just the next event that says, this crop is pretty much made, and then I think we'll begin to trade down towards new contract lows.
Now, on the other hand, you look at soybeans, and they are net long about 21,000 contracts. Now, granted, that's not a really big position, but will that have an influence or not on soybeans?
It might have some. I think with South America pretty much out of the bean market for a little while, that the U.S. steps up and will probably be a little better in maybe some of our exports for the bean market. But kind of like the corn, it lifted up, in this case, about 30 cents and then has just plateaued and haven't seemed to be able to get much below 8.70 or much above 8.90.
This morning, we noted where the dollar was getting weaker, and the September U.S. dollar index futures currently down 477 points at 97.10. Could that be a big factor this week?
That will probably be some of the bigger factors that we've seen. We've seen the dollar lose quite a bit. It had a small rally last week, and as you say, it's down this morning, and it could resume that downtrend. That would help tremendously in there as while we are competing with other countries for that grain business.
All right, Chris, if you would, sit tight, and we'll come back here in a moment. We will take a look at our livestock trade, see how they're performing early in the trading day here on Monday. We're talking with Chris Swift, and we'll be back after this. We're talking with Chris Swift of Swift Trading Incorporated. Now, we had the cattle on feed report that came out last Friday, Chris. Wanted to talk with you about that for a little bit. The on-feed number actually came out at exactly 100% when the trade was looking for 99%. Placements at 99%. The trade was looking for 97.5. By the way, that on-feed number, USDA says that was the second highest June inventory number since they began keeping records in 1996. The placements number covered, the marketings number was said to be 72% of what we had a year ago. Trade was looking for 73.8, and USDA says that marketings number was the lowest ever for the month of May since they began keeping those records. So definitely it seemed like it had a bearish tilt to it. And in fact, if we look at our futures trade now, on the live cattle board here this morning with quotes provided by bar chart, we have the live cattle lower with August down 65 right now. We're at 94.75. October down 62 cents. We have the feeder cattle market right now showing August $1.07 lower at 131.47. All the months are at least $1 to the downside. And on the lean hog market today, same story here with July down $1.90 at 46.55. August down $1.60. Now, I will say October on out are not $1 lower. We have them about 47 to 72 cents lower. So let's pick this thing apart here and talk about live cattle first. Where does that put us now, Chris? Are we kind of mid-range when it comes to technical factors on August live cattle?
Well, what we're looking at right now is we've still got elevated beef production. We noted that last week we produced as much beef year over year as we had in any other year. So that inability to produce beef has now gotten back up to full speed and actually has expanded some of our packing capacity, which should help to get rid of this backlog a little bit sooner. But the issue at hand is the greater this packing capacity is with still elevated numbers on feed, is going to produce a lot more beef going forward than what we were anticipating prior to.
Now, speaking of feeder cattle, everything over $1 lower. Now, how does that all fit into the equation today?
And so it was kind of interesting. We thought that with the placement number being a little bit higher, it leaves fewer feeder cattle out there being backed up. And we have noticed the elevated sales, much more normal with last year than what we did the last 4 or 5 weeks. But unfortunately, we do have this drought encroaching in there, and people are having to make decisions off pasture a little bit sooner this year than last year. So if we unfortunately have to push some of those feeder cattle into the market, they're not going to be as well received.
And it really does make one wonder when Tim Ross was talking about all those extreme temperatures moving into the southern high plains once again. It's a big cattle production area and makes you wonder just how that's going to impact weight gains moving forward for the next week or so. Anyway, thank you for the time, Chris. Always good to hear from you. I appreciate it. Chris Swift of Swift Trading Incorporated, and he's based in Nashville, Tennessee. Janet, back to you.
All right.